Imagine a family so powerful that emperors bowed to their credit, kings adjusted their wars to match their balance sheets, and governments lived or died based on their willingness to extend a loan. For over a century, the Rothschilds weren't just bankers. They were the lifeblood of Europe's power and wealth. Their influence stretched far beyond the reach of armies. Their story reads like a conspiracy thriller, a family quietly moving money faster than monarchies could move soldiers, whispering decisions in royal palaces, while their faces remained largely invisible. But here's the unsettling truth. This family didn't need crowns or armies. They engineered modern finance itself, and we are still living inside the machine they built. To understand how they rose to dominate, we need to step back into Europe at the end of the 18th century. The continent was a patchwork of rival kingdoms and empires: Austria, Prussia, France, Britain, the fading Holy Roman Empire. Wars were constant, monarchies fragile, and treasuries unstable. Gold and silver were the foundation of money, but armies consumed it faster than kings could mint coins. In this chaotic landscape, credit wasn't just a luxury, it was survival. Enter Mayer Amschel Rothschild. Born in Frankfurt in 1744, Mayer wasn't destined for power. He began as a coin dealer, running a small shop in the city's Jewish ghetto. But he was shrewd. He quickly realized that handling coins wasn't as profitable as arranging loans and managing wealth for the aristocracy. His big break came when he became the financial agent for the Prince of Hesse, one of the richest men in Europe at the time. That connection would be his golden ticket.
By the time the Napoleonic Wars erupted, Mayer Rothschild had already laid the foundation of a dynasty, and he had a plan far bigger than any other banker. He sent each of his 5 sons to different European capitals: London, Paris, Vienna, Naples, and Frankfurt, creating a family banking network that no government could match. Think about that strategy. In an era when news traveled by horseback and wars could consume entire countries in mere months, Mayer Rothschild built a private intelligence and financial system faster than most states could respond. His sons could move money across borders, lend to allies in one city while collecting debts in another, and most importantly, spread risk. If Paris fell to Napoleon, London would still be running. If Vienna went bankrupt, Frankfurt would have credit. This international web was the true innovation. It was diversification on a geopolitical scale. The Rothschilds weren't just banking, they were reshaping the structure of modern finance. They had built the infrastructure of international credit before most governments even knew how to keep up. As the Napoleonic Wars raged on, the Rothschilds turned from clever bankers into financial titans. Governments needed money more than ever, and the British, embroiled in a war against Napoleon, borrowed astronomical sums. Armies had to be paid, supplied, and moved, and traditional royal treasuries were far too slow, too corrupt, and too fragile to keep pace. That's where the Rothschilds stepped in. Their courier network could move information and gold faster than official channels. And in a world where a day's delay could mean the collapse of an army, speed became power. The most famous example of their influence came during the Battle of Waterloo in 1815. Legend has it that Nathan Rothschild in London learned of Napoleon's defeat before anyone else. The myth says he used this inside information to manipulate the bond market, selling British bonds to spark panic and then secretly buying them back for a fortune when the news became public. While this story has been exaggerated over time, the truth lies in the Rothschilds' ability to move faster than any government.
They had an advantage: their network. They could deliver information and, with it, money faster than official channels. With that information in hand, Nathan Rothschild did indeed capitalize on the bond market, gaining a monumental fortune. After Waterloo, the British government became even more dependent on Rothschild credit. But that wasn't the only area the family revolutionized. By the 1820s, the Rothschilds were no longer just funding wars, they were financing peace. They lent to governments across Europe, underwriting massive state loans. They helped fund railways in France and Austria, canals in Britain, and mining ventures in Spain. Whenever countries needed to stabilize their economies, they issued bonds. And it was the Rothschilds who orchestrated the sales. The Rothschilds turned sovereign debt into a standardized market, a model that's so familiar to us today that we barely notice it. Every time you hear about a government issuing bonds, borrowing from international markets, or facing a debt crisis, you're hearing the echoes of the Rothschild blueprint. Their genius lay in realizing that real power wasn't in hoarding gold in a vault. Real power was controlling who had access to capital, under what terms, and at what price. They didn't just make money off loans. They controlled who could rise, who could reform, and who would sink under debt. They didn't need to overthrow kings. They made kings dependent on them. But with this immense power came suspicion. By the mid-19th century, rumors were swirling. Had the Rothschilds secretly replaced monarchs with their own invisible power? Were they manipulating revolutions, controlling governments, and secretly running Britain's empire? The conspiracy theories grew louder, and for good reason. Money and power had shifted. The throne was no longer the strongest chair in the room. The bond market was. And at the head of that market sat the Rothschilds. By the mid-19th century, the Rothschilds had reached their zenith. Their family empire spanned Europe like a nervous system of credit. They financed Britain after Waterloo, Austria during its reforms, France under the July Monarchy, and even the Holy See. The Rothschilds were called upon to stabilize economies after revolutions and rescue governments on the brink of collapse. In an era when there were no central banks as we know them today, the Rothschilds themselves were the central bank. Their approval could make a bond issue succeed or fail. But it wasn't just governments that benefited from their power. The Rothschilds poured money into the Industrial Revolution, investing in railroads, copper mines in Spain, oil in the Caucasus, and even the Suez Canal. They controlled the flow of capital at a time when it was the oxygen of industrial growth. Yet even at their peak, their dominance had limits. Other banking dynasties like the Barings, Hottingers, and Warburgs competed for influence. But more importantly, the very system the Rothschilds perfected was too successful to remain private for long. By the late 19th century, governments began creating their own central banks, more structured and regulated financial markets, and broader institutions that reduced reliance on one family. The Bank of England evolved. The Banque de France grew in power. Eventually, the United States would create the Federal Reserve. The era of private dynasties controlling sovereign credit was slowly giving way to the rise of institutional banking. The 20th century brought catastrophe. 2 world wars, revolutions, and the Holocaust shattered the old world order. The Rothschilds, like other Jewish families, were persecuted. Their assets in Austria, Germany, and France were seized by the Nazis. They lost palaces, businesses, and collections, and their influence never fully recovered. After 1945, the rise of America and the dominance of the US dollar eclipsed any private family's control. Wall Street and central banks now called the shots. However, here's the paradox. While the Rothschilds' direct dominance declined, the system they created only grew stronger. Sovereign bonds became the backbone of modern economies. Every nation today borrows on markets shaped by Rothschilds' innovations. The courier networks they pioneered became today's financial information networks. Their principle, that power lies not in gold itself, but in controlling credit, became the DNA of the global financial system.
This is where the myth of the Rothschilds takes on a life of its own. Even as their direct power waned, conspiracy theories about the family grew. They became the symbol of invisible control, the faceless family allegedly manipulating wars, revolutions, and economies. But the truth is more unsettling. The Rothschilds didn't need to secretly run the system anymore. The system itself was their legacy. Today, the Rothschild family still exists. They run Rothschild & Co., a respected investment bank with offices in Paris, London, and other cities. They still manage wealth, advise corporations, and oversee billions in assets. They are still wealthy and influential, but they no longer sit at the head of the financial empire. Modern financial giants like BlackRock, JP Morgan, and Goldman Sachs overshadow them, but their ghost remains everywhere. Whenever you hear about a debt crisis, Mexico in 1982, Greece in 2010, or Argentina almost every decade, you're hearing the echo of the system the Rothschilds helped build. When central banks set interest rates, when governments issue bonds, when markets punish nations for deficits, you are witnessing the mechanics of a world the Rothschilds engineered 2 centuries ago. The Rothschilds proved that money is not neutral. It is a tool of power. Money can build empires, fund wars, rescue governments, or enslave nations in debt. The family may no longer be the emperors of finance, but the machine they created still rules. And unless you understand it, you're trapped by it. So what's the lesson? Don't get distracted by the myth that one family secretly controls the world. That's too easy. The truth is harder and more dangerous. The Rothschilds didn't need to rule forever. They engineered a system that outlived them, a financial architecture that still dictates the rules of wealth, debt, and control today. If you want financial freedom, you need to understand that system. Because whether it's 19th century kings or 21st century consumers with credit cards, the trap is the same. Dependency on a financial order designed for those who issue credit, not those who borrow it. History doesn't repeat, but it rhymes. And the rhyme of the Rothschilds is still with us. A reminder that real wealth isn't just about money. It's about who writes the rules of money. If you don't learn that lesson, history will crush you with it.